All right. Good evening, everyone, and thank you very much for joining us tonight. Wow, interesting times out there. As a trader and therefore someone that needs to watch the market during the day, there's been a hell of a lot going on. I was running a trade group discussion today at midday, and one of the attendees, who may be on the session tonight, I hope they are, pointed out to me that the fall that's occurred in the GFC, the first 32% of the fall took 47 weeks, and what's happened now has just happened in 5, and it really got me thinking and coloured a little bit of my thoughts around the email we sent around inviting people to the session today. But it gives a moment to pause as to the scale of the pullback that we've just observed to happen. Why is it happening? What's going on? Is this going to be an opportunity for us if we can see clearly, and we need to start thinking about ways of approaching it. If we went back, the last sort of online investor briefing I gave on an investment topic for a product such as this, we were talking about going long volatility and long correlation. So or short correlation, and looking for a hedging product, which we over the last 6 months had done quite a lot of. All right, someone's saying they can't see my screen. Let me fix that for you. Apologies for that. Show screen. 1 to 2. There we go. Thanks for pointing that out, Richard. So yeah, look, lost my train of thought, but I'll get back on it. So just quickly, my name's Patrick Nelson, the Managing Director of Reach Markets, I'll just quickly go through the disclaimers. Any advice contained in tonight's presentation is general only, doesn't take into consideration your personal circumstances. You need to decide for yourself whether it's appropriate for you. Past returns are not an accurate indicator of future returns. And I think what I was talking about is the last time we were on a session like this, which was around 4 or so weeks ago, probably 5 or 6 weeks ago, we were talking about a product for shorting the market, really to hedging the market, which is something that we've been going on quite a bit about over the last 6 months, not because we foresaw what was happening, purely just because we've been in a bull market for the 12-year period. We've been, a lot of the levers that we've had available to us to smooth out the edges on the little economic crises that we might have that might trigger something bigger have been used. How much further can you drop interest rates, for example? We've got limited capacity to use that technique now to do it, and so we've been hedging, right? And as well as going long investments and so forth, and we I guess we didn't really see what would happen. We're now talking about something completely different, where we've come out we haven't come out the other side yet, but we're now looking at it saying, well, it sold off a lot. How do we start thinking about how to move into an investment where we actually can optimize our entry? Excuse my English on spelling there. I did write this presentation this afternoon. How do we optimize our entry into a and didn't get marketing to check it yet, into a fear-driven market? So how do you get set now? Because if you if you go in and the market falls another 20%, what happens then? Is there more in it? I mean, we're still seeing panic selling. We saw it again today. This is really one of those times where you need to think carefully about how you get in. But equally, right, when we look back in time, it's always been times like this when there's been blood on the streets, when fear's been at its highest, that opportunities have presented themselves. All right. So just going back to what we were talking about earlier, this is the GFC, and I'm looking at the Aussie market, not US market here, and we are going to be talking about a US investment tonight. But 47 weeks to drop 32%, and this last bar here actually took it down a little bit more than 32%. This is today we were down 34% from the peak. So this is week 1 of the fall, 2 of the fall, 3 of the 4 of the fall. So 4 weeks, but the 5th week was when we were at our top. So really, realistically, 4 weeks. So maybe I was being generous, but 10 times faster, 9 times faster has been this capitulation in the GFC. Have a think about how we were feeling during the GFC, right? So it is interesting. Will this continue? I have a feeling that we will see some consolidation at a point in time, but I do think we'll see the market fall off. So how does this all end, right? And this is a slide I pulled from the previous deck that I did on my last presentation, where we were talking about hedging the market. And at that point in time, we were aware of coronavirus, and we were really scratching our heads when the market was breaking new highs. And we were aware of coronavirus. We were seeing what was happening. We were observing businesses that were were having their orders cancelled. Their hotels were empty. All of these issues were happening for these businesses and these people. Yet the market was breaking new highs. It really just didn't make sense at that point in time. Our trades were all long vol, but we met with, when we were talking to the ASX, or sitting into one of their presentations, they were talking about the industry, the funds management industry, all short vol, really short vol, shorter than they'd ever been, right? So they more exposure to short vol and really big positions. So we've seen that a lot of hedge funds have blown up. There's been billions wiped. It's been absolute carnage around these companies. Where does it end? That is to be seen. Someone also shared on my session today that 26 people have won Tats Lotto in the last 4 weeks, and I think it was 6 people have died from coronavirus. I don't know what that means, but I didn't mind the stat. Look, is this overblown? I mean, look, is our reaction to? I'm not sure. I mean, I spent the last 3 days in isolation because someone that I had lunch with, an extended 2-hour lunch with, had 2 days earlier had a long meeting with someone that tested positive for coronavirus, right? Someone from Saxo Bank that was travelling here from Singapore. So they'd met with that person, and that person found out that. So I, as a preemptive measure, just decided, look, I don't want to take any risks. I've got elderly parents. I would hate to be someone that had passed it on, even unintentionally. So I just self-isolated me on hearing that news. In that time, on Monday morning, we moved half of our team to work off-site, half working from remotely, and we've put in all sorts of measures. And I think the world is putting these, everyone, well, not the world, but people are putting in these measures to sort of isolate, to social distancing, not sharing devices, cleaning our hands more, thinking about these things. And I wonder if we can sort of halt what's going on. But at the moment, where we're at is there's a lot of this going on, right? There are a lot of problems we've seen. There's 34% just wiped out of the market in such a short period of time. Volatility was 11%, implied volatility. I think I didn't check the exact numbers. We might go and have a look at the chart later on, but it was trading up at 70, high 70s, I think, today. Someone, Mark, you're online, you probably know. It was just real. It's really extreme volatility markets, and so the fear's still there. 79 implied volatility today. It's really high, we've got concerns, and those concerns not going anywhere. It's not the only problem that exists, but this one's been one that we were nervous about, the trade war in 2018. We were worried about what was going to happen in China, but in this instance here, there's not our only problem. There's other things, but we honestly believe that this guy will be back, and with the speed of the pull-off, I'm not saying that we're not going to go into a bear market, far from it. I'm not saying that we won't go down further and that panic selling won't continue. That's not what I'm saying, and that's not what this particular investment is about either, which I'll go through and explain in a lot more detail as we get going. But I guess we're all sitting there going, yeah, look, I know, I read the Warren Buffettisms and the Rothschild sayings about blood in the streets and all these different sayings that out there, and I got to remind myself that the market will go up at some point in time. But while fear is so hard, it's very hard to be able to think about a time where you want to take that exposure, all right? And so, you know, coming out of global financial crisis, S&P 500, 71% up the year after, 15% the year after that, dot-com bubble, 35% plus 7, Black Monday, 27, the following year, 21, all right? So this Optimiser is an investment that gives us exposure to the US. It's positioned for a rebound. We've got capped downside risk, and it's designed to give us an optimized entry point. So where do you get in, right? And that is the question. Clarence has asked me, do you have any quant modelling to forecast what's going to happen to the market in 3 months' time? I most definitely do not, Clarence. I don't know what's going to happen in 3 months, and I doubt anyone would have modelling this quickly that could sort of predict that with all the unknown that's you know, that's out there at the moment. And I think that, Clarence, one of the challenges is at the moment is that it is that unknown that's going on, that unpredictable, that black swan event that is really challenging and driving the fear in the market at the moment. All right. So this investment is designed to help us optimize our entry point. So it's a US S&P 500 investment. Why? This is a chart coming out of the GFC, and we can see versus the S&P outperformed Australia quite strongly. It is our view that the US is much more likely to outperform the Aussie market coming out of whatever we're coming out of now, this recent crash, right? We think that for a number of reasons, the American economy is stronger. The businesses within it. I mean, what's going on in the world at the moment? What's changing? What's driving? What's disrupting? Information technology, and this is a little bit dated, this one. I grabbed it out of an old deck today. It's a couple of years old, but it's not too far off. Information technology has slightly crept up in Australia, but US and in the US as well, it's at this point in time 24%, right? 10 times more activity in the US versus the overall sector weightings, right? Not like for like, right? But it's the businesses there that are on international scale disrupting international markets. An Uber business or something like that, a disruptor like that, doesn't disrupt the local market, doesn't disrupt if you're in Melbourne, doesn't disrupt taxi driving in Melbourne. It's a global play, and the US economy, we believe, is significantly better positioned than this, right? Than the Aussie market. So we think there as well. 4 phases of bear market. The year after the trough bear market since 1929. The S&P has gained an average of 47%. So this is something with capped downside as well. This is a structured product. We do a few structured products. We used to do, we've done them over the years. They've served us well. We don't do a heap of them now, but there is a time and a place for them, and we think this is one of those times. So I'll just go through the numbers behind the investment. So quickly, if you wanted $100,000 worth of exposure, it's a $14,900 net outlay. It's a 2-year investment term. The maximum risk is $14,900, and the uncapped upside is on $100,000. So it gives you $100,000 of $14,900 gives you $100,000 worth of uncapped upside on the S&P 500 over a 2-year investment term. All right. The way that $14,900 is put together is that $100,000 exposure. It's a 5.95 interest rate, so you pay prepaid interest on $11,900, and there's an advisor's fee associated with structuring the investment. So total investment outlay. All right. So the investment works by the optimization part of it, and why it's called the Optimiser is that it's designed to give you exposure. And to give you the lowest month-end exposure over the next 6-month period, right? So if, for example, the market rocketed up from the end of March, which is when this product trades, then the entry point and the valuation will be based on the valuation at that point in time. If the market was to fall another 20% over the coming months, then let's say in June, that was the low point for the market, or July or August, the month-end valuation is the valuation that is used to come up with the strategy price for this particular trade. So it gives you the ability to go in. The other thing that I'll say about it is that if vols are high, it has an exposure level. So there's a volatility exposure level rate. So while vols are very high, the exposure levels are lower. And then when vols are lower, the exposure rate increases, right? And this structure allows us to be able to put a trade like this together when volatility rates are sort of off the charts as they are at the moment. So it's a really good way of us being able to set ourselves and get into the market. We don't have to worry about today's timing, as in, is this the optimal point to, I still think you could sell down for another month or 2 or 3 or whatever that might be. We're able to trade our way into the market in that instance. And if the market's super bullish, then volatilities will be lower and our exposure rates will be higher during those periods. So that's sort of the structure of the investment. Right, now as far as performance goes, based on the 14,900 cash outlay, which would give us $100,000 worth of exposure. If the market falls, we lose our money. Doesn't matter how much we lose. That market falls, the maximum we can lose is 14,900. So there are no margin calls. You pay for the investment up front. That is the total amount that you pay. There is no more to pay after that. Right. So if market is up 25%. At the end of that period, the return on your initial investment is 67%. If the market was to go up 50%, it's a 236% return. If the market was to go up 75%, 403. If it was to go up 100%, 571%. All right. So I guess one of the reasons why people like this type of investment, they can go in. It's not like they have to take a massive. Well, let's not. Money means different amounts to everyone, but if they want 100,000 and their usual exposure on a trade like this would be 100,000, they don't have to put 100,000 in, right? And so if you put 100,000 now in and the market halves over the next 6 months, your investment's worth 50,000. If you put 100,000 and it halves in the next 6 months, your 14,900 trades at the best end market price at that point in time, right? And then at the end of the period, it's, well, if it rebounds and it's up 100% at the end of that period, if it doubles or it goes up 75% or 50%, you can see the returns that you can have, which is one of the reasons why people find these styles of investments. And the reason why we looked at it was really, and there's lots of these different types of things out there, but what we've really been scanning for over the last 6 months have been investments which can really reflect what we felt overall about the market. And so more recently it's been, volatility, go long volatility, go, dispersion type products have been something we've been interested in. We've done a lot of those types of investments. And now we're looking at it going, well, you know what, it's been a significant sell-off. It's off 34%. This product doesn't trade until the end of the month. Wouldn't be surprised if we're lower, but I just don't know, right? And could it go a lot further in that period? It could, right? It may. I don't know. I have no idea. I do not have a feel for it. It is unknown, and I don't really know if people do. Now, I think that, there may be an overreaction, but there is definitely, what's Qantas doing? I've got friends in the hotel game. Their hotels are empty. We have lots of clients with lots of different businesses. I know in our business, we're operating remotely. We might have to have 100% of our staff working from home. We can deal with that because we've worked with different offices around Australia. We've got an office overseas. We have lots of clients all over the place. So we're used to dealing with remote systems, and it's relatively easy for us to go remote. Other businesses might be similar, but they haven't had the history, the workflows and so forth to react. Everyone's getting impacted. I know everyone probably sitting on this session tonight feel exactly the same way. We just don't know what's going to happen next, and that's why we like this type of investment. The fact that the market has come off so quickly is another reason why I like this type and the timing of this type of investment, because of the fact that it's off 34% already. A lot of what we expect the move to come off has occurred. And you look at companies and you look at their valuations, when things settle down, and it might take some time, there will be pain, there will be downgrades, there will be other things that come out. There will be some companies that won't survive. Yes, I agree with all of those things, but underneath it all, there will still be a group of people that need products. People will recover, we'll brush ourselves off, and there will be great businesses to invest in. And we think the exposure to the US market the structure of that is a good way to handle it. I mean, going in there and looking at individual opportunities on this path as well will definitely be there for us. You don't need to take 100,000 exposure. You can take as little as 50,000 and greater amounts. I've taken up to 400. We have, we frequently have people that take significantly larger trades than that, but there's just some examples. Or, speak to Blake Reed, speak to David Sellers, the advisors that are managing this investment, and they'll be able to, to price up whatever sort of level of exposure you want. This is a way of confidently taking a position in a high fear market, limited downside risk. You've got that uncapped upside potential, and we're really trying to position ourselves for a post-bear market rebound or whatever it is that we're experiencing at the moment. I don't even call it a bear market. Like, I don't even know what to call it. It is something else, right? Yes, by definition, you would be calling it a bear market, and yes, I do think we'll probably be in a bear market for a period, but it definitely is something that is working differently. Just going through those numbers again. All right, so what's an investment presentation if we don't wheel out Warren Buffett? But coming back to that value point, there is definitely going to be value around. We want to look at it. This is just a couple of charts. So this is post-global financial crisis that Blake put together for me today. Thank you, Blake. This is the move, 71% coming out of that, and see how big this move down was. Now, usually the move down when the market crashes out like this, it's kind of like this at the start. So we're like, it falls off pretty. That's a savage move, right? Normally, and then it does a bit of this, and then it goes boom down, right, towards the end, in the last third of the bear market. That's not what's happening this time around, right? And then you get this strong move out of it. So maybe it'll be the inverse of this. Maybe we're going to see this at the start and then a bit of that after it. I don't know. But we think things are happening in a much shorter time frame than what they have happened previously. All right. Now, if you want to get the PDS, product disclosure for this investment, and the investment overview and all the other information, just type yes into the chat box and I'll get that sent through to you. And here we go. This is Black Monday as well. So it's a limited resource loan, exposure, interest rates, no further obligations, and capped downside. All right. So there you go. That is this particular investment. We like this one. I think, hang on a second, someone's saying that they've lost sound. I'll just do another sound check. Lost sound. Okay, back now. Yep, all good. All right. I tell you what, I'm still sitting in my office here, which I've been doing for the last 3 days, and I notice, I've run a few trading webcasts and so forth, but we notice that at night people get on Netflix and the internet drops out. So sorry, you missed me there for a moment. I was probably just recapping and saying that, we like this investment. We know there's going to be opportunities coming out of this absolute rout that's come out in the market. We do believe that the bull market will come back, and we do believe that there will be a rebound, and we think that there's a very, very good chance it will be that significant rebound will happen sometime in the next 2 years. Being able to, there's the old saying, try to pick bottoms, get a smelly finger. Which is one of the things that I was taught by my old trading mentor when I started in the trading games. Picking the actual bottom of the market, now that I put that visual in your mind, is very difficult, and this is a way of us being able to set ourselves up so that we can, the structure of the investment allows us to get into it at the appropriate time over the next 6 months. So we'll be able to have, it's a look back function that allows at the end of that 6 month period to be able to choose the lowest point in time, and it's got that volatility in there as well. I'm sorry, have I lost sound again? If anyone can hear me, please type in they can hear me. All right, so, okay, all right, so thank you. If you, for anyone who hasn't requested the PDS, just type in yes. We'll get it sent out to you. If you would like to talk, now, if you would like it, if you would like us to send you out a pre-populated PDS, just type the level of exposure that you would like in the chat box. So if you want 100,000 exposure, just type in 100,000, 50,000, and so forth, and we'll put together the exposure level for you and send out the pre-populated paperwork for you. So this investment trades on at the end of the month. It will only be open for, I believe, another week, right? So if you want to do it, you need to sort of get your skates on, process the information and so forth. You know, and we understand you're going to have questions, so to the guys about it. We've been going deep dive on it to make sure that we're right across it. The manufacturer of the investment, we've got a direct line to, so you know, if there are any technical questions, we're happy to get that through for you as well. All right. So guys, is there any, like, there were some questions and there's been quite a bit of feedback coming through as I go. So I'll scroll back up to the questions and comments and appreciate everyone coming along tonight. It's a Thursday night, so usually everyone's out having a drink or going to a restaurant or a show or something on a Thursday night. Including, this is what I try to do as well, but we're all indoors at the moment. All right. Okay, Mark's made the comment, perhaps we should be looking at the behaviour of people in supermarkets for a clue on the stability of people and markets. All right, let's go down. Another comment from Mark, which was, Market Wizard's frame told me that fear is in the state of the bulls and bliss is in the state of the bear. Interesting comment. What happens to long options positions in the markets if into expiry, if markets are shut down? Alan's left the conversation, so I'll add, it's just a general comment. Now we're trading off these are not exchange traded options. So you know, it's you know, if the S&P 500 shuts down, I guess what happens to what happens to money? You know, we got lots of problems. I'll be growing some veggies in the backyard and putting some pickets up at the front, I think. But so what is the impact of the $80 falling? Now you have the stock market short term and the way out of this sell off. Well, look, I don't know the context of that because that is quite a broad question. But you know, we're expecting the Aussie dollar to be weak for a while. You know, I don't really get paid for having an opinion on Aussie US currency. I don't mean to say that in jest, but it's just but that is definitely our position. Jeremy's asked, available to non-Australians. So Jeremy, New Zealanders, I believe, yes. If you've got an Australian address, yes. But outside of that, let us know what your situation is. You can type in the chat box. It's privately viewed from here, and I can make a further comment if you like. Let me go scroll down further. Okay, so for all those people that have requested, you know, their exposure amounts, we'll get those pre-popped into PDSs and sent across to you. Martin, you've asked a question about end of month prices and confused about it. I'm going to explain it and probably confuse you some more. But basically, so read it, we'll send you the PDS and you can read about it. It's probably the best way of digesting it. But basically, there's a look back option in the investment which allows us to be able to go back and see what was the lowest end of month close, and that is the valuation that's used for the product and the derivatives behind the product, right? So that's the look back function, right? And this was structured before. This was structured more than 4 weeks ago, right? So it was structured when volatility was lower and so forth. I don't think you get this investment structured today if we went to an IB. All right. So okay, sorry. Yeah, Tracy. Yep, got that. Narab's asked what stocks I would recommend to buy at this stage. Look, I don't know. Run me through. I'd probably run through the market. There's plenty. I think we talked about it. We'll probably talk about it Narab next week on our next big trade webcast that Ivan and I run each week. Look, we're not stock pickers. We're traders, and we're also we work in the world of private equity and venture capital. So public market stock picking is not something we do a lot of. We do invest in listed companies, but yeah, that kind of research there are better people out there for. Won't the slide depend on the way the government acts? Daryl has made this comment. Yeah, I think so, to an extent. I think confidence is beaten up pretty bad at the moment. So I think the government can have, the governments, plural, like our governments can have an impact, but to an extent. But what impact does that have on the market in the shorter term? Yeah, don't know. Yeah, Adrian, yep, you're correct in that comment. Minimum term, so this is a 2-year term, Tony. So Tony's asked what's the term of this investment. It's a 2-year investment term. If the market goes for a run, we can definitely close out of it earlier, right? LP's ask, is it AUD or USD? You invest in AUD. Jeremy, Singapore resident. Let me ask Jeremy. I'm not sure if Sellers is online. Dave, if you're online, or Blakey, can you just make a comment on that question being, can you invest as a Singaporean resident? Okay, not seeing her available. Oh, thanks, Richard. He's across that already. Russell, yeah, Jeremy, if you have an Australian address, then let us. Then we can do something there. All right, Russell. Yep, got that. Amanda, yes, we can send. Yes, we can send S&P charts. All right, so I'm assuming that. Sorry, that. Who was it? Someone asked me about. I'll bring it down. Who was it? Let me go back. Sorry, I'm getting quite a few questions. Some of the questions are dropping down quickly. Yeah, Amanda. Sorry, Amanda. Sorry, I'm not sure what you mean when you say S&P charts, but I've got the ones open that we have. One of the ones open there. Do the investment have to run 2 years, or we can get out earlier? Yeah, you can get out earlier. We've got a dispersion. One of the long vol trades we did, or investments that we did, that we'll be looking closely at the moment, and that has a dispersion element to it as well. And I believe, and we'll be talking to people about this, but I do believe that dispersion is actually going to significantly increase when things settle down. You think about that. Some businesses are going to get absolutely smacked by what's going on now, and some businesses will recover really quickly or may not be impacted, and I think we're going to see things behaving very differently. So some will recover, like say China manufacturing kicks back in and so forth. Some of the businesses are like, okay, yeah, we're back in action, but others are going to take a long time, and I think that dispersion will increase. But that's an aside to what your question is. In this case here, we can definitely get out if the market runs up quickly. We can close out of it early. All right. There's a delta element to this structure of investment. So if that happens later in the play, it's actually better for us. But if it happens earlier and it's big enough, yes, we definitely can. It's a purely S&P 500 play. Ramon, who's asking that. Richard, thank you for clarifying those things for me. Is it currency hedged? No. Will you create an options platform for US market and implied volatility? Craig's asking me this question. Not in the foreseeable future. When I say foreseeable, not in the next 2 years, I wouldn't imagine. But it kind of depends on a couple of things that we're working on at the moment that could take us in a different direction. All right. Elim, yes. Why does the graphic show total net cash outlay? David, if I showed over 3 year in the graphic, it's my bad, and I apologise because I did write this presentation today. There have been quite a lot of things going on over this week, including being in isolation from the world. So yeah, I wrote this today and didn't even get it back to marketing to check my English and typos. So thank you for picking that up. I'll fix that for the next presentation. Yes, it is 2 years, and sorry for that mistake. Can I invest through my super? Richard, yes, you can. Clarence, maximum period for investment is 2 years. Yeah. And Russell's asking, like, what the question, which is what happens if the currency goes up? Yeah, I mean, that's a trade-off. Like, you know, with this type of investment is that, you know, we think we're way more bullish the S&P longer term, and that is than we are the Aussie currency, and we think Australia is going to do it tough for a period relative to, say, the US. I mean, everyone's going to do it tough, right? But yeah, we definitely think there's going to be that divergence, but you know, that is an element to this, Russell, for you to consider. What is the difference between your product and investing in the S&P direct? Okay, so thank you for that question. That's probably a spot-on question. So what is the difference? Okay, well, if I put up $100,000 into the S&P 500 right now today, because I think it's going to be up in 2 years' time, if the market falls another 30%, right, from where it is today, or it falls 50% from where it is today, then that's what's happened to my $100,000 has gone to $50,000, and I've got to wear that, right? And I potentially might have to fund that money in, i.e. I could be using those funds elsewhere, it could be offsetting debt, whatever it might be, right? This particular investment allows you to go in today, you're only putting $14,900 up. It has got that optimizer function on going in where we get to choose the best end of month price over that 6-month period. And that means that my at-risk capital is $14,900. That's the maximum I can lose. If I'm completely wrong about this trade, then that's what I've lost at the end of the period. So instead of having $100,000 worth at risk, it's $14,900. And I've also got that optimization point where I can actually make a move to put an investment together, and then off I go. So there are some of the differences. I hope that clarifies that point to you, and please ask me to clarify anything further. John's asked, can I invest more than once into this product? The way that it trades is it will actually trade on the 31st of March. So I think we need to have TDSs back. We need to have them funds cleared and all that kind of stuff. Probably 2 or 3 days before that, you know, minimum. And I'm saying those times because we're obviously trying to accommodate for people that want to do this trade. And there are a lot of people that want to do it. So at that point in time, it will that the investment will close. Right now, I don't know whether we'll get pricing on this investment again. So I don't know whether we'll be able to price up at the appropriate levels to be able to do this trade again. But we'll look at it. If it's there, we'll try and get it. All right. John, okay, as in, can I buy 3 at different values? Right. No, John, this particular investment will go in, and the value that it will trade at will be the best price over the next 6 months. I'm not sure I understand your question after that. As in, can I buy 3 at different values? It will trade at the value that, you know, the cost is as outlined in the slides, and then it will trade over that 6 period. But you can definitely apply in 3 different entities and do 3 different applications if that's what you're wanting to do. Yeah, Adrian, yeah, thanks for clarifying. The entry point at this is a date at this point in time, so we trade the day we get in, but then the strategy value will be determined by the lowest closing value over the next 6 month end, right? And you can do 3 different trades if you like, do $100,000 lot, $300,000 lot, $200,000 lot. John, if that's what you want to do, yes, you can do that. All right. Fantastic. Well, thank you very much for all those questions. If you haven't already typed in yes, please do so. If you want to put in the value that you would like us to put in the application for you, no, John, no problem at all. If you want to put in the value you would like us to put that in, please just put it into the chat box. David and Blake will be available to speak, and if you would like someone to call you, type into the chat box the best time to call. I know we're all busy, and you know, if you put the time down that's best to call, they will call you at that time to make it easier for you and for them as well. All right. So thank you very much for everyone coming along today. All the best out there. You know, it's pretty tough for all of us, right? We're all in businesses. We're all worried about it. We're all trying to react, change our businesses. You know, scale back what we need to scale back, and you know, I think it's a good time for everyone to pull together. So all the best, and I hope you've got something out of tonight's presentation. If we can be of any assistance, please let us know. And yeah, thanks for taking the time. Cheers and good night. Thank you.